So we've had quite the downside since the Sunday video that I posted, and I did reference the supply zone that we had right here. We saw a fake breakout attempt on last Friday, and then also just based on Monday of this week, we were unable to reclaim above that supply zone. So therefore, price saw a rejection, and we saw this gap down between Monday and Tuesday. And what's really critical about Tuesday is this blue line right here, as well as, of course, the white box, aka the supply zone that I have. Of course, this supply zone has acted as a resistance numerous times. You can see over here, they first acted as a resistance over here on April 18th. So we know this is a hard resistance range where there are sellers present. But what's really interesting here is this blue line, because you can see after we gapped down, price was able to bounce just slightly off this, but then collapsed under it soon after. And the key thing is it closed the daily under this level. Now, where did I derive this line from? If you scroll back here on the hourly chart, you can see that I got this level from all the way back here on this August 16th high pivot. And then if you drag it across to the high that we made here on May 1st before having some downside afterwards, you can see that we did break out, or at least had a fake breakout above this level. And we were unable to hold very long. Of course, we never had a daily close above my supply zone, so I remained bearish further downside, and we did see this nice sell-off down to right about where my demand zone is here of about 4,100. Then we saw a slight bounce, and we have seen some upwards activity after hours because of NVDA's earnings report. But nevertheless, we've established a downward trend, especially because of this fake breakout, guys. You do really have to note the fact we were unable to stay above the supply zone, and it actually attempted to stay above, but then was brought down with a lot of weakness afterwards. So even despite the after hours price action, we saw it go up because of NVIDIA's earnings. I still believe we are within a clear downward trend, and we will fill this double gap over here shortly. It's been slightly delayed because of this fake breakout to the upside, but we will fill this shortly just after some form of a minor bounce. Of course, this is a minor support level of this 4,100, so no surprise we have received a bounce off this level. But again, having two of these aggressive gap downs following a fake breakout, this is bearish to test at least 4,050 before it decides what it'd like to do afterwards. And actually something interesting today, if you do follow the Cheddarflow Twitter account, we did see both of these orders hit the tape near the exact low of day right before things started to pick to the upside. They are short expiration call contracts. You can see 418 strike and 416, so quite a bit out the money considering the expiration they bought on this, and then 1.5 million in premium and about 1 million in premium here. And you can see as well, this one was at the ask, and I believe this other one was above the ask. Yeah, it was above the ask. So both of these happened to hit right around that low of day area before things started to pick up. So it's actually very crucial to look at these short dated expiration contracts that are out the money, like as you can see here, with a lot of premium behind them, because they tend to be good at sniping the bottoming range for at least a small spike. This doesn't have to actually go all the way up to the strike price that they picked here, but this is still a possible trading strategy that I've seen decent success with in terms of calls. Of course, we saw some puts today, but it wasn't anything crazy at all. You can see it still was put heavy if you just look at the put to call flow metric, but if you look a little bit under the hood, you can see we saw some of those arbitrage trade strategies here. So these I don't really consider that much, like the 434 strike, 700 strike, etc. I'm more so focused on the out the money ones with a lot of premium. We didn't really see much of those today, like we've been seeing the past couple days, which was warranted because of course we did have this very nice drop over here. And that's not to say those puts can be wrong from time to time as well. We did see a lot of those puts being added around this range even before we started to go up. And of course, it's difficult to hold those as you continue to go up, despite the fact that we did have a fake breakout. But nevertheless, we did see those whales come in around that low of day today, and they were able to catch some nice upside. So watch for this in the future. Could be a possible day trade to a short time frame swing strategy if you see these continuously hit the tape once we reach around oversold levels like today. And another thing with SPY that I do want to talk about as well, of course, we've been seeing a lot of dark pool premium lately, and a lot of it was near the highs. We saw a ton in that 417 to around 419 range, and by a ton, I mean like 5 billion plus days, which is very rare to see. Today, we had 1.3 billion at the 414 level, so nothing too crazy. But I want to do is go back to each day throughout this week as well. We saw 2.6 billion, again, 418.72, that range, 417 to 419. We've been looking at a lot of premium. 2.6 billion is definitely a decent amount. It isn't over that 3 billion threshold, but it's definitely eye-catching. And if we look back over here to Monday as well, we can see that we didn't have that much overall, just about a billion, also in that 418 range. So wouldn't really count this day as much, but really where it starts to get interesting was last week. If you look at Friday, we saw 5.3 billion at the 419.21 level. This is an insane amount of premium, guys. Very rare to see something like this, and this was most definitely a sell as it was near the highs, and that was my expectation because, again, very unlikely you see, just looking at SPX's chart right here, very unlikely you see whales adding all the way up here, at least to their positions. So that was most definitely them offloading shares, and a lot of shares as well. And just looking back to each day, if you didn't see our Sunday video, you can also look at Thursday, which was 4.4 billion at 415.29, which we are below right now as well. And then if you go back to Wednesday, you can see we had 4.8 billion, and this was at 410.34, which conveniently enough, if you look over here, just go to a simple SPY chart, you can see here we did bounce right around that 410.34 range. So if I just do a horizontal line to show you guys here, you can see that 410.34 roughly around this level. So we didn't really decisively break below this at all. You can see it actually acted as a support initially throughout the day. We did have this 15-minute candle close below, but it was picked up soon after and it was able to hold throughout the day. So look for this level going forward. Of course, we do have the level I provided here, this demand zone that it just about ticked today between 4,091 as well as 4,100. So do watch for that as a demand zone. And then now you can look for this 410 roughly 34 level as we continue from here, because we did have that pop again, like I said earlier, from after hours. We'll see if this gap is filled by tomorrow. So not surprised to see some form of a minor bounce, especially because of how oversold we are after a couple back-to-back extreme down days. But I expect this to be retested shortly. We will see what happens there, because bears will begin to pick up a lot of momentum if they can get back down below this roughly 410-ish level. So do keep that in mind going forward. Also, something interesting I found from today, this PDF up here from the Fed, it's actually a fairly long research paper that basically explains how they created a financial sentiment index based on tweets, which is very interesting. And this is the Fed that created this. And you can see part of their findings were we find that changes in users' engagement rather than an average tweeted sentiment drives most variation in the index. That's not necessarily, I guess, as important, but the Twitter financial sentiment correlates highly with market-based measure of financial conditions, and that overnight Twitter sentiment helps predict daily stock market returns. That's very interesting. They didn't actually go too in-depth on this last point right here. Back a little bit further into the paper, it is 36 pages long. They did have some of their studies in there, but they didn't explain like what accounts that we're looking at to determine this, because they did look at about 4.4 million different tweets and back tested them along a long period of time to derive this. But we'll see if they bring out other info related to this index that they created. I thought it was very interesting, especially because the Fed is the one that created this. This is not just someone from retail or a large firm. This is the Federal Reserve that actually went through and did this study and found fairly successful results from it. So you can find this PDF on our Twitter. We did post it earlier today. I just thought it was very interesting that they did go through with this. And again, we'll post some more updates if we see anything new that comes out related to how they were sourcing their Twitter data. But nevertheless, a cool paper overall. And last comment for today's video, you can see here Apple had a fake breakout of this previous channel that it was within. We had a rejection off of this trend line up here and then continued to the downside. And we actually closed right on this trend line today. However, after hours, we did see some more downward pressure. So it's very likely we do retest this lower end of the level coming up here shortly. This would be around 169, but keep in mind 171 is a very critical level. You can see we gapped up right to that level. We found a support over here, about over here as well, and then also found a support recently from today around that 171 level. So that is a critical level for Apple to break before it makes a decisive move to the downside. Keep that in mind going forward. And then last thing here, DXY, we saw the dollar go on a tear lately. It broke above this 103.57 level, which was capping it as of the past couple days. And actually have a better chart over here for the dollar that kind of shows this. So you can see over here, we did break out of this rounding bottom pattern. We did retest over here the breakout level and then continued all the way to the upside. And now we've been just continuously grinding higher and higher. And we are still en route, like I've been saying, to this about 105-ish level. Of course, the supply zone is very wide, but I'd say 105 seems to be the case coming up here. And of course, that brings a lot of weakness to equities, specifically the Dow. Dow's had a lot of difficulty lately. As you can see from over here, we did fall out of this channel that we had already been in previously all the way back here in February. We fell out of this channel and then retested the downward trend line this initial time. Same exact thing up here, fell out of the channel, and we likely will retest this in the future after some minor bounces around this time period just because of the S&P 500 and QQQs. But still, the Dow very weak right now, mainly because of the dollar and then of course other variables as well. But continue to watch this because this does weigh on the rest of the market. It is one of the largest indexes, so that will have an effect on everything else. But other than that though, appreciate you guys watching this video, and I'll see you guys next time on Sunday.